moment, the markets are not that volatile. They're going in the right direction after the downward turn. We have seen the stocks rise slightly today, but not a lot, even though UK GDP came in a bit higher than expectations at 0.7%, making it the fastest growing G7 economy in the first quarter. But what you've got to remember is that without the effects of the budget, and with the national insurance rises for employers and the tariff impact. So while it looks good, we really need to see the figures for the second quarter, which will obviously June. We'll find that out in sort of July time.
Are you saying that it's unlikely that we'll be the leader in the G7 at that point?
I think it's highly unlikely. Eurozone, as we know, it only grew at 0.3%. But, Spain did really, really well again.
Why does Spain keep continuing to do well? Annual inflation rate falling to 2.2%. Food price rises slowing further as well. And
I know, but they're saying everything's only rising at 2.2%. Yeah. It's still going up. Yeah. We've come out at 0.6% growth. Ireland was the highest at 3.2, but that was mostly due to multinational companies. We had Italy 0.3, Germany 0.2, France 0.1, and Portugal negative 0.5. I think Spain, obviously we do have a large black economy which does contribute a lot to it.
About a quarter of the economy still, isn't it, really?
I think it's higher than that. I think we're talking, which is good as far as I'm concerned. Absolutely blinking brilliant.
I think some people have no choice but given the average wage in Spain, I'm not talking about the average wage that people are meant to get. I'm talking about the average wage that people actually get. You can't really be autonomo on that, can you? Because
no, you can't. You can't afford your social security payments. Even if you look at the US, inflation has risen by the lowest amount in 4 years at 2.3% in April. Prices have come down for gasoline, energy, groceries, and Trump is pushing the Fed to cut rates. As you saw, the UK cut rates on the 8th of May from 4.5 to 4.25%. And it looks like in the UK, if things carry on going this way, the rates could be down as low as 3.5% by the end of the year.
Right, okay. That would be a good thing? No.
It'd be a good thing for mortgage payments.
Yeah, it depends what you're looking at.
But obviously, if you have money in a savings account, you're not getting much anyway. That's going to decrease pretty rapidly. So if you see any good fixed rate deals now, I think for anything around about 4% or just above for sterling for the next 3 years, I would grab them as quickly as possible. I think at the moment we have something for 3 years. I'm just trying to remember what it was for 3 years. I think it was round about 4%, and that's guaranteed for 3 years. And I would take that, no risk, capital guaranteed. I would jump at that with some of my money. So the things are looking a bit more rosy. Obviously, we've still got tariffs in the background. We've got the EU, which is it's coming up with a new trade proposal for the US to try and get its tariffs down. We saw the UK do a deal with the US, whereas the UK.
How good is that deal though for the UK?
It's not for the UK. It's absolutely rubbish. It gave away everything. The US can flood the UK with their special growth hormone meat, they're specially water-fed chickens. The UK got absolutely nothing out. Starmer just sort of bent down on his knee, and I wouldn't say what I'd say he actually did, but just gave in completely, capitulated. And the EU is looking at ways to, to ignore that, I don't know what that noise is looking at ways to get a similar deal. Because obviously they want a good deal as well. So all of them are coming to the table. I think it shocked them that Trump actually, brought the tariffs in immediately. And I think he knew what he was doing. Everyone would panic, markets would go down. Then he'd say, give them 90 days, scare the bejeebies out of them, and they come to the negotiating table, even start to negotiate with China, as you've seen. And as today, we've seen the oil price come down by 3% on the potential of a new nuclear deal between US and Iran. So
$64.70 I've got at the moment.
Yeah. I hope it goes down at the pumps as well. I'm not sure if it will. Yes. Don't laugh like that. If it had gone up by 3%, it would have gone up immediately. Exactly. It is quite a farce. So it's quite positive, actually, I think. I think people panicked originally when Trump did that, but I think in the back of his head he knew what he was doing. Give people a shock, and then they'll come to the negotiating table.
Is that his business head? Is it go really big and then be prepared to compromise and make it look like you've backed down? I mean, because it does look like you're just backing down on what he'd said in the beginning.
Yeah, it does, but then you've got people like the UK just going in and signing a deal that gives America much more rights than it had before. So we'll have to wait and see what the other deals come up with. But that is what is a country? It is a business. You're trying to make profit and loss. You're trying to make, it break even instead of the debt growing more and more and more. So therefore, you need to have a business head, which really annoys me why we've got Rachel Reeves in the UK, who has about as much business head as my sausage dog. We'll have to...
I understand he's got quite a good portfolio.
Actually, if you look at his toys, he's got a wide diversity of toys there. He knows what he's doing.
Excellent.
He's not silly, so he knows what his priorities are.
Some of the other ways that Spain might be making money, it's been named the European country with the highest tax burden on home purchases, making quite a bit of cash there.
It does. Whenever you buy a house here, it's a nightmare. But when you sell a house here, it's a nightmare. It's difficult. There is capital gains to pay if you sell your house in Spain if you're under 65, whereas in the UK there isn't. If you sell your house when you're under 65 in Spain, you have to pay capital gains cash unless you're using that money to purchase your next main residence. Yeah. If you're not, then you will pay capital gains. It starts at 19% and goes up and up and up and up and up and up. So it doesn't go above 30%. So, but it's still a lot to pay.
But buyers pay an effective tax rate of 30.3% when purchasing a home. That's about 5 times more than the European average at 6.5%.
It is. And I know I was shocked when I bought a house here how much the costs were. It is just absolutely ridiculous. But the market is so buoyant.
Yeah, absolutely.
And they're not going to do anything about it. I had someone who I work with, she wanted to sell her house, she put it up for sale on the Monday, it was sold the Tuesday morning. No negotiations, nothing, just bought.
Yeah, people are accepting the price that they go up for, certainly, and falling over themselves, in fact.
I had someone the other day.
Number of examples just in the last couple of weeks from not just the ones the estate agents that we normally deal with, but others as well who are all saying the same thing.
Yeah, I had someone who sold it online without it even being seen. And I had someone I know, he bought something online without actually going to see it. He saw the drone footage, but I thought, well, that could be anything. But at the moment, it's just, in certain areas, it is just so buoyant, it's unbelievable, and the prices are overinflated. So we could see a slight, kickback as we've had before in prices once this dies down. But at the moment, it shows no sign of there being the demand for property.
Well, yeah, the demand is the same as it was just before the crash in 2008. Not that I'm saying
don't mention the crash, don't mention... but
the skyline is full of cranes and properties are being built and snapped up, obviously before completion. So there's no sign of it stopping yet.
No, there isn't. There's so many different nationalities trying to move here as well. We've had an influx of Dutch, the British,
Well, still are those that are buying more property in Spain than anybody else.
And, I'm a financial advisor, and we've seen a huge increase in people moving to Spain from the UK who we would consider very well off. And high net worth individuals, people who've got $1 million plus to invest. They've spent $1 million on a property. People who had businesses in the UK who just want to escape what Labour are doing, so they've sold their businesses, they've sold their properties, they're relocating to Spain. Even though we have high income tax here, etc., the quality of life is a lot better, healthcare is a lot better. So they're just taking the plunge and moving here, and we've got a multitude of nationalities doing the same. So Spain is benefiting a great deal from other policies in other policies in other countries, and especially in the UK, the number of people leaving who have money is very, very worrying.
Significant. And whilst politics may well be a little bit under the cosh and a little bit in turmoil here in Spain, it doesn't seem to affect the economy.
We're used to it, aren't we? I'm sorry. But we are used to no party having a majority, and it seems to work better that way in Spain. So people just get on with their day-to-day life. I think they just want to be left alone to get on and do their own thing.
With all of the political infighting from what we've been gathering from our Spanish sources. So, yeah, you're right. I think just get on with it, and, hopefully it'll settle itself down at some point. But hopefully it won't have a negative effect on the economy.
I hope not. I think, we are very resilient here. As you saw when we had the downturn before, 2007, 2008, things were hard. But people got by, people picked themselves up. And in Spain, you have got the Spanish the families get together, they look after each other, they support each other, which is a huge difference to some other European countries.
You were concerned a little bit about market volatility at the moment, and Trump or Musk sneeze and things change. We do have to take care with what we're doing, don't we?
Yes, we do. I think what you've got to remember is beware of the sell signs. Sometimes, how can I put this politely, the markets are manipulated by people who are going to make money if you sell your funds. So big financial institutions will sometimes, how do you say this, in a nice way without trying to be derogatory, will sometimes manipulate the markets. That's all I can say. They will spread rumours, etc.
Not like you to sit on the fence, Christina.
No. And the thing is, I think most people got to remember is never attempt to time the market. So unless you've got a crystal ball, you're never going to get it correct. You're never going to know when the markets have reached bottom or they're going to go up. And most people have got to remember is when you're investing, you are investing for the medium to long term. So you've got to stick to your goals. You've got to stick to, what you want to do. But age does play an important factor, because if you think about it, if you're 30 and you invest 10,000 and you lose 30%, that's not really a problem. You've got a long time to get it back. If you're 60, you've got $1 million invested and you lose 30%, then that is a problem because you haven't got so much time to get it back. But if you look over all the dips in the market over the long term, you're more than likely to get a really, really good outcome, no matter what is going on in the market in between. Obviously, for some people, they've had to sell when there's been a downturn. It doesn't apply for them. But for most people, if you look, the rebounds are much bigger than a downturn. Don't panic. I think most people have got past the panic stage. 2007, 2008, I think, was a reality check for most people. Most people realised that they sold, they crystallised their loss, and therefore it took them twice as long to get back to where they were if they just sat tight and rode it out. When we saw the markets going down over Trump's tariffs, I had very, very few, and I mean very few people call me or worry about it because they just know that the markets will bounce back.
And also in the Trump-Musk era, things move so quickly. By the time you deliberate over, should I maybe do something or ask about it, it's all change again anyway, isn't it, the next day?
And what you've got to think, if you are selling funds, they usually take a couple of days to settle. So therefore, you may sell them when you think the market's going down. By the time your trade goes in, the market could have already started to go up. So be very, very careful. What I would warn people about, and I've never sold these in the whole of my career, is regular savings plans. There is one company, which I can't mention, which predominantly a few years ago was just selling regular savings plans. Well, it's more than a decade, well, it still does. And I've seen a few people come into me who have these plans, and they are for 5, 10, 15 years. And they say if you put a regular amount in, say you put 100,000 in total for 10 years, they say, if you look at it in 15 years, you will have 250,000. Most people who come to see me, have they put in 100,000, 200,000 over 5, 10 or 15 years, have got back less than they put in because of charges and commissions. So be very, very careful with regular saving plans sold by big companies. The best thing to do if you want to do regular savings is to go onto a platform, and there are ones that obviously Blacktower can offer where the costs are cheaper. Obviously Blacktower will have to charge you something to get you set up, but it won't be much, and they will help you if you want, picking funds, etc. going forward. But it's a lot cheaper and you can drip your money in when you have it. You can just invest as you see fit. There's no minimum. Well, obviously you can't just put 5p in or £5, but it's very low minimums, and that's the best way to do it, rather than going to one of these plans where they have fancy graphs and they show, look, this is how it's increased over time. What they don't tell you is, with the older style plans, the first year of all the money you put in goes on charges. So, and if you close them out early, you get so many penalties, you don't get your money back. So just be very, very careful what you do there. It's just because I've seen a few, lately, and it is very disheartening when people have trusted these people, they've put their money in, and when they come to the end of their term, they're not getting back even as much as they put in. So please be wary.
And it is kind of worrying when you see things like the Bank of London's ability to keep operating being questioned, run by, not run by, but certainly linked to Peter Mandelson, and the regulator are investigating it, and you start to think, hang on, you have to worry about what's going on there.
You do. I think you have to be very, very careful. I think anyone investing money, look into the company you're investing with. I'm not just saying this, but Blacktail's been going 40 years next year. It's got a good track record. All its advisors are fully qualified to do business in the country they work in. We've got lots of expertise, lots of experience. The thing that annoys me as well is some companies, they make you take your exams and you take them in 6 weeks, you're fully qualified, but you've never had any experience in the financial markets before, you have no knowledge of them, and yet because you've got an exam, you can go out and sell to people. You need someone who's got experience as well, the knowledge, the experience, who's been through the ups and downs of the markets to be able to help you. So just be very, very careful. It's best to get someone who operates in the country you live in as well, because they understand the taxation in that country as well as what you can invest in.
Also being properly legal, because some companies that operate in other countries don't have the fully legal requirements to operate in others.
I think the good thing since Brexit is that people that used to just hop in and out from the UK, turn up at a hotel, do a financial advice seminar, sign up people, pop back to the UK, meant to see you once a year, never turned up. That doesn't happen anymore because they can't. They just cannot do business. Most companies in the UK do not passport into Europe anymore. And even with Blacktail, we really only operate in Europe. For our European arm, and then when people move back to the UK, we hand them back to our UK arm because they understand the taxation, trusts, various other products in the UK that we don't have to use in Europe and that we don't have to keep abreast of. So that is very, very important, that for your pensions, for your savings, you have an advisor who is based in the country you live in, not someone who's called you on the internet from Switzerland or from Dubai or from the UK or wherever. Someone who is in your country. As you know, in Spain, each region has different rules, so it makes it very, very complex. So people need to understand what's going on. You have different income tax rates, you have different inheritance tax rates, you have different wealth tax rates. So it is really, really key that the company you pick has a good history, a good track record, and is firmly established and is going to be here for the future.
Indeed. I'll tell you something that's been worrying a number of people is the amount of data breaches we've been seeing recently. And that to do with some of the big UK retailers. People still order from M&S because it was a little bit difficult when Brexit happened, but now it's still possible again. And no bank details were stolen, but addresses and order lists. The Co-op also has been struggling with a data breach we've been seeing over the past couple of weeks as well. It's just part of the modern day life, I guess.
Yeah, Marks and Spencer's, this cyber attack had started before Easter and is still continuing. Their stores are still having huge problems. They put in a claim for 100 million on their insurance. They have insurance against cyber attacks. I'm sure the final cost will be considerably higher than that. They are still tackling this problem. What they do is these cyber attackers, they go in, they hack into the system, they try and blackmail them for a great deal of money, not to destroy their systems. And companies don't give in, because once you give in once, they're going to do it again and again. So it's very, very, and I think that's what has to bring home to people, technology, cashless society. We all saw what happened when we had the power outage in Spain. You couldn't buy anything with your card, you couldn't do anything with your card. If you didn't have cash, you were basically stuffed. So cash is king as far as I'm concerned. Everybody should have some cash on them at all times and should have some cash physical cash as a backup in case things do go wrong. And anyone who pushes for a cashless society needs to have their head examined, because it is absolutely a no-no.
Back in the day, of course, everybody had a stash of bin Ladens under their mattress, but it's not like that anymore in Spain, is it? What about Americans, Dan? We touched briefly on what Donald Trump has been doing. The tariff situation has changed the way that Americans spend their money and how they manage their day-to-day lives.
Yes, it has. Obviously that's the tariffs. That's what it's made people do, and it depends on what happens with tariffs in Europe, in the UK. It could change people's spending habits there as well. In America, I can see what they're trying to do. They're trying to get more goods made in America, which is happening in some companies, but it will put up the cost, because most of these goods for companies like Apple, Microsoft, are made in countries where the minimum wage is basically non-existent.
Yeah. Certainly a lot less than in America.
In China, they have whole cities where people live in huge tower blocks, and they just work, 24/7, making goods for export, and get paid very, very little.
Well, there's been huge relief in China since the deal. Well, it's been put on hold for 90 days, hasn't it, for the time being, while they sort it out. But certainly, there was quite a lot of worry in China about that. I mean, even if the top dogs didn't sort of make out that they were worried.
They are. Of course they've got to be worried. It's a huge market that you're going to lose. And the amount of exports that go, go to America is huge, especially if you look at the technology industry. So there will be compromises, there will be deals made, things will be sorted out.
Been a lot in the local press in recent weeks, Christina, about continental wealth management and the people involved in that. A number of people losing quite a lot of money, having got involved.
Yep. Not a lot of money, all their money. What happened was there was a financial advisors who sold products that seemed too good to be true, and they were. Most of them were structured notes. At the time, income you could get from a normal investment was around 5 or 6%. They were saying that you could put your money in a structured note and you could get income of 12, 15, even 16% with your capital guaranteed. It was all a complete and utter fabrication. These notes were not capital guaranteed, and basically your income was coming from your capital. So when it came to the end of the term, 5, 10 years or whatever, you went to get your money back, you didn't have your capital. It had been paid out to you as income. Or in some cases, the money had just disappeared. It was mostly done, a lot of people invested their house proceeds, all of it, or all their pension funds in these notes. And I dealt with dozens of people. Some of them were suicidal. I know a few people did commit suicide over it, who lost everything, where the people at the top of this company drove around in Ferraris, Aston Martins, started charities, tried to look like pillars of the community. Basically, if anyone said anything, they would threaten them and slag them off. In the end, it all came crumbling down. The authorities and the regulators in pension jurisdictions like Malta looked into it and thought, oh my God, these people are going to lose all their money. How could this have been sold to them? And stopped having terms of business with Continental Wealth Management, which means it could no longer do business. Therefore, it folded and disappeared, and the money disappeared with
35 million euros in this pension fraud case. As you say, there's no comeback. People are not going to get their money back.
No, they're not going to get their money back. The main people involved have disappeared. If it happened to me, I'm sorry, I don't care. I would have hunted them down and destroyed their lives. But it was horrific to see. Most of these people were retirees, as you said, pensioners who had lost everything. I had one lady who came in. They'd sold their house. It was a 7-figure sum. They'd been convinced by this company we are talking about to put their money into a structured note that would give them income of 12% a year for however long they needed it, and then they would get their capital back. They had no state pensions, no private pensions. This was their only income. Her husband sadly died. She didn't understand anything. Continental went bust. She came to me, and the amount of money she had left was 70,000. That was all. Okay, and I could cry now. It broke my heart. There was absolutely nothing I could do for this lady. Absolutely nothing. And you could tell them what's happening in the court case, but as you said, someone is going to go to prison. They are going to appeal, and you can tell them all the details. But people are still not going to get their money back, and that is what I find absolutely frustrating, because these people are still wealthy people. I'm not sure about it. You tell me what happened. I can't remember exactly what's happened with the court case and what the result was.
There will be an appeal by the only person it looks like at the moment that's been convicted. We'll obviously have to report more on it when the detail comes out following the appeal. But the fact remains of what we were saying, that so many people lost money, and to that huge amount, 35 million in total on that pension fraud case. Still, we see all over the place the offers for people to sell their homes, renting it back. Some of these schemes are obviously are on the level and work, yes?
I don't know.
Right, okay.
I'd have to look into it more. It does worry me. It's like equity release. Those schemes always worry me.
It seems to not offer you perhaps the right amount, or the amount that your property is worth, from my understanding and experience.
And I've had lots of people. We had the equity release scam in Spain, where they went to court, where people were going to lose all their houses, etc. I know it went to court, and they ruled in the favour of the people, who'd taken the equity release out against the company who sold them.
But that's okay if the company is still around and the money's still there. When it's not.
But when it's not, what do you do? And I think that's why you've got to go to reputable companies. You've got to look into things. If something seems too good to be true, it is. Please believe me, it flipping is. I had so many people over the years, with the Continental Wealth Management one especially, and another one which was a betting one, coming in and saying, but they're offering me this, they're offering me that, you're only giving me this. Why can't you do the same? There's no fees on anything I'm doing with them. And for some of them, they were selling the same products we're selling, and there was fees, but they just didn't disclose them. And I used to sit there and say, look, this is not the whole picture. But some people were blinded by greed and just thought, well, you're just lying because you can only give us 5% and I can get 3 times that amount and I've got no risk. And for those people who were absolutely arrogant, and some of them were downright rude and horrible, you deserve what you get. What you got. But some people were so innocent and were so conned. It is just unbelievable. And I think, as I said, every time I've been on the radio, if something seems too good to be true, it is. When you look at websites, any website can look fancy. If you look for a website and it says it's FCA regulated, please don't just trust that. Go onto the FCA site, put in the regulation number, and in most cases you'll find out that doesn't exist. Or if it says it's regulated in Spain, you can look on the Spanish website. If it's regulated in Cyprus, in Malta, wherever, you can go on their websites and have a look. And if that number does not exist, that company is fraudulent.
And you can always get a second opinion, or a third if you need to.
You can. And many people come to us at Black Tower with their investment portfolio, with things they've got, and they'll sit down and we'll go through it. And in some cases, things don't need to be altered at all. And we are completely transparent, completely upfront, and we will say, look, it's best you leave it where it is. However, with Brexit, we are finding that most UK IFAs cannot now deal with people who are not resident in the UK. And therefore, advice we gave them prior to Brexit to stay with their IFA now has to change, and they have to move. And we have a huge number of people who are moving to Black Tower because their IFAs can no longer service them, or their financial advisors have disappeared. And we can help you with that as well.
So I know that putting money in the bank, it doesn't really gain you very much. It's relatively safe up to a certain amount. But there are ways, other things that we can do to perhaps eke a little bit more out of what we have.
Yeah, you can go, at Black Tower we offer everything from capital guarantee, no risk deposits, to the higher end of the spectrum where you can do aggressive investing if you want to. We don't do one a solution that has to suit everybody. When you come to see us, we can find a solution that's best for you. Some people want some in no risk, some in low risk, some in medium risk. They want a diversified risk portfolio, which we can put together for you as well. Some people are balanced, which means we can put that together for you. That's the most common one. When people come in and say they're speculative or aggressive, I must admit, I usually do go, "Ooh, are you sure?"
Yeah.
I have a few that are, they've got experience in the markets, they know exactly what they're doing, and therefore that's fine. But for most people, you're either balanced, cautious, and we can help you. And if you need advice, please don't hesitate to get in touch. You can go to our website, which is blacktowerfm.com, fill in a contact sheet, put attention to Christina via Bay Radio, and it will come through to me. We usually come back to you in 24 hours. You can always call the office, 9650581212. If we're busy or we're not there, just leave a message, we will get back to you. You can always email info@blacktowerfm.com. Again, put for the attention of Christina or Bay Radio. And it's not just myself in the office. We have an office in Javier. We have people across the Costa Blanca, from La Zenia, all past Valencia. And we've got people across Spain. We've got people across Europe. So if you need any help at all, please get in touch. We're more than happy just to sit down and go through, review what you've got and give you our best advice. And then it's up to you if you take that or not. And we can always, tweak things if you want it tweaked. We can do whatever you want, really.